Did you know that 97% of people who try to get rich chasing hot stocks, crypto moonshots, and meme coins end up broke or barely breaking even after a decade, while the top 1% of self-made millionaires I hang out with have a completely invisible second portfolio that pays their rent, groceries, flights to Bali, and even the bar tab without them ever touching their main trading account? That second portfolio is exactly what saved my ass after I blew up my first million in 2017 trying to be the next crypto wolf, waking up one morning with $38,000 left in the bank and rent due in 4 days. And today, that same boring, unsexy, grandma-style machine now spits out more than $18,000 every single month like clockwork while I still swing trade Bitcoin and tech stocks with the other account. This is the invisible portfolio that literally pays for my entire lifestyle forever. And right now, I'm pulling back the curtain to show you exactly how I built it, why 99% of people will never have one, and the dead simple rule that turned cash flow from a dream into autopilot reality so you can stop living paycheck to paycheck and start living portfolio check to portfolio check. Let me take you back to 2017. I was that cocky 29-year-old in a Manhattan loft, driving a leased Lamborghini, bragging on Instagram about my seven-figure crypto gains, until the market decided to teach me humility. One margin call later, and I was eating instant noodles, staring at eviction papers. And the worst part was realizing that even when I was rich, I was still one bad month away from disaster, because every dollar I made was tied up in volatile assets that could vanish overnight. So I made a promise to myself. Never again would I have to choose between paying rent and taking a position. And that's when I discovered the dirty little secret the real wealthy keep quiet. Their money works in two completely separate lanes. Lane 1 is the sexy, high-octane growth portfolio full of Bitcoin, Tesla, and options where you chase 10x winners. And Lane 2 is the invisible cash flow fortress built from boring dividend aristocrats, private peer-to-peer notes, and cash-spewing real estate side doors that quietly compounds and pays the bills no matter what the market does. And once Lane 2 covers 100% of your lifestyle, Lane 1 becomes pure gravy. You can swing as hard as you want because you're playing with house money. Most people never build Lane 2 because the system has brainwashed them into thinking wealth is about getting rich quick instead of staying rich forever. Wall Street, TikTok gurus, and even your uncle on Facebook push the dopamine hits of 100% gainers, while the millionaires I know in Miami and Dubai are laughing all the way to the bank with their sleep well at night machines that nobody screenshots, because a 7.8% yield doesn't look cool until you realize it's $180,000 a year arriving every quarter without lifting a finger. So here is the core rule that changed everything for me. The 100% lifestyle coverage rule. You are not allowed to touch a single dollar of growth money until your invisible portfolio generates enough monthly cash flow to pay every single fixed and fun expense in your life. And once it does, you are officially financially bulletproof. I call it invisible because nobody sees it, no flashy cars bought with it, no Instagram stories, just direct deposits hitting your account like a loyal employee who never calls in sick. And today I'm breaking this rule down into the exact 4 pillars I use to go from 38K in the red to 18K plus. Positive cash flow every month while still keeping 60% of my net worth in growth assets. Pillar number 1. Dividend Growth Kings. These are the 50-70 blue chip companies that have raised dividends for 25 plus years straight. Think Procter & Gamble, Johnson & Johnson, Coca-Cola, 3M, the companies your grandma owned and died rich from. I started buying these in 2018 when everyone was mocking boomer stocks and chasing 1,000% crypto pumps. But while crypto crashed 90%, my Dividend Kings kept paying and raising payouts. The trick is to buy them in chunks every single month no matter what, reinvest dividends automatically, and never sell. Today, my dividend portfolio alone throws off $4,800 a month on average, and it grows 8 to 12% per year between price appreciation and dividend increases without me doing anything. How to start tomorrow? Open a brokerage like Schwab or Fidelity, Set up automatic investing of $505,000 per month into SCHD or VYM ETF if you want one-click diversification, or handpick the aristocrats list from SureDividend.com. Set dividends to D-RIP until you hit coverage, then switch to cash payout. These companies survived 2008, COVID, and every recession because people still brush teeth, drink Coke, and bandage wounds. Pillar number 2. Peer-to-peer private notes. This is the secret sauce most people are too scared or too lazy to touch, but it's how I turbocharged my cash flow from $2K a month to $10K plus. After the 2018 crash, I started lending money to real people and small businesses through platforms most have never heard of, plus private deals I source myself, yielding 9 to 18% paid monthly, secured by real assets like property or equipment. My biggest winner is a $150,000 note at 12% to a laundromat chain in Texas. $1,500 hits my account on the 5th of every month like clockwork, backed by the washers and dryers themselves. I also use ground floor for real estate-backed loans at 7 to 14%, lasting 6 to 12 months, and PaperStack for discounted mortgage notes. The key is diversification. Never more than 4% of your portfolio in one note, and always take collateral. Checklist to start this week. Sign up for ground floor and auto-invest $1,000 across 50 loans, join the PaperStack marketplace, and network with one local real estate investor to source your first private deal. Within 90 days, you'll have monthly cash flow most stock investors wait decades for. Pillar number 3. Digital cash flow assets. These are the modern version of the landlord game without tenants, toilets, or termites. I own a portfolio of automated online assets like niche authority sites, age domains I lease, and dividend-paying digital real estate in the form of private SaaS and content businesses I bought for 2-3x annual profit. My favorite is a site in the outdoor grilling niche I bought for $180,000 that makes $72,000 a year on autopilot from ads and affiliates. $6,000 a month straight to my LLC while I sleep on the beach. Another is a 50% to use a check in a tiny software tool that serves accountants and pays me $3,200 every month. These are boring businesses nobody wants to brag about, but they compound faster than apartments and scale globally. How you can grab your first one. Start with Flippa or Empire Flippers. Set alerts for sites making $2,000, $10,000 a month with 24 plus months history, finance with seller note or SBA loan, and you're instantly a digital landlord collecting rent in dollars while sipping margaritas. Pillar number 4, real estate side doors. These are the cash flow hacks that don't require $100K down payments. I get paid thousands every month from ATM machines I own and gas stations, billboard leases on land I don't own, and tax lien certificates in Florida yielding 16 to 18% guaranteed by the county. My ATM portfolio of 22 machines nets me $4,100 a month after servicing, and I started with just $35,000 borrowed from my dividend account. The beauty is, once these 4 pillars are stacked, they feed each other. Dividends buy more notes, notes fund digital acquisitions, digital cash flow buys more real estate side doors, and within 3 to 7 years, you hit the magical 100% coverage point where your lifestyle is free. Let me show you the math that changed my life. My total monthly expenses, including Miami rent, private jet shares, organic groceries, and spontaneous Mykonos trips, are $16,400. Pillar 1, dividends, $4,800. Pillar 2, notes, $6,300. Pillar 3, digital, $3,800. Pillar 4, side doors, $4,200. Total passive $19.5 to $100 every month with a 16% buffer for inflation or bad months, and that number grows 10 to 15% per year automatically. Compare that to Billy, my old trading buddy who still has $800,000 in crypto and tech but panics every bear market because his $12,000 monthly burn isn't covered. He sold his Rolex last crash to pay bills. Meanwhile, Phil, who followed the invisible portfolio rule, has $22,000 monthly coming in from the same 4 pillars and swings half his net worth on 0 DTE options for fun. Because losing a trade literally doesn't matter. The difference? One built a fortress, the other built a casino. So here's your immediate action plan to start your invisible portfolio today. Step 1. Calculate your true monthly burn, including every coffee and vacation. Step 2. Open Schwab and set 500 will plus automatic into SCHD today. Step 3. Fund ground floor with whatever you have left this month and turn on auto invest. Step 4. Join 2 niche Facebook groups in your hobby and ask who wants to sell a content site. Step 5. Message me on Instagram, Old World Finance Official, for my exact Dividend Kings spreadsheet and private note template completely free. Do this, and in 3 to 5 years, you'll wake up to direct deposits that make your 9 to 5 optional and your boss irrelevant. This is how real wealth is built, not with Lambos and hype, but with boring machines that pay forever while you chase the exciting stuff with zero fear. Like this video, smash subscribe, grab the free Invisible Portfolio Starter Kit in the link below, and start building the system that pays your life while you sleep, travel, or YOLO Bitcoin. Because once your money makes more than you spend, the game is over and you've already won. Let's get rich the smart way.